Welcome to our 2020 Africa Roundup interview series, a series of conversations to round up this extraordinary year with leading advisors and voices from across Africa. I have the pleasure of speaking with Theophilus Emuwa. For those that don't know Theophilus, he is the managing partner at the law firm Aelex in Nigeria. His practice of over 30 years is focused on corporate, commercial law, and taxation. Theo regularly advises on acquisitions in Nigeria and in Ghana and draws on his multifaceted background of law and engineering to provide insightful advice to the firm's clients. He's a fellow of the Chartered Institute of Taxation of Nigeria and is also currently the vice chair of the International Fiscal Association, the Nigerian chapter. Theo was also a member of the Private Equity and Venture Capital Committee set up by the Nigerian government to advise it on reforms aimed at developing equity in Nigeria.
Private equity.
Welcome, Theo.
Thank you, Faisal.
And thank you for taking the time to be with us today.
You're welcome.
Let's start with a short summary of 2020 in the context of Africa. How would you summarize 2020 and its wider impact on Africa?
Well, as everywhere else in the world knows, 2020 has been dominated by COVID-19. So it's difficult to look at 2020 without and ignore COVID-19, because since early in the year, most of the world has been sort of in slow motion, if not frozen motion. And Africa has been no different. Apart from not being able to travel because of the restrictions, we've had lockdowns in most countries. So even within each country, it's not easy to travel. And of course, that has had, a consequential impact on economic activity in most countries. So that's how should I put it? The biggest thing of 2020. We're all hoping that by the end of 2020, that 2021 will be much easier. Right now, nobody knows when this will come to an end. So in fact, most people are struggling to make plans. They don't know how to plan or what to forecast. It's a really big problem. There were problems in many African countries before 2020. They've only become exacerbated because due to COVID. So yeah, we had, for example, in Nigeria, the oil price had come down, so the economy was already slowing down last year. So COVID has only made things worse. What can I say? You talk about highlights, but it's difficult to call anything a highlight in this, the current circumstances.
No, I agree. I think the COVID has dominated and it's impacted every sector of society.
Yeah.
And like you say, Africa hasn't been immune to it. Let's look specifically now at the West African region. You've already touched a bit on Nigeria there, but the region itself, West Africa, how has West Africa fared in this crisis? And here we're looking for specific highlights, whether good or bad, for the region.
Okay, well, on the one hand, you can talk about the response to COVID-19, and in that regard, West Africa and perhaps most of Africa has not fared badly. Yes, we don't have the same sort of modern health system that you'll find in Europe and America, but for some reason which the scientists are yet to decipher, we haven't suffered from COVID-19 to the same extent as in many other countries. Death rates are quite low. So in that sense, we haven't done too badly. You also read about Senegal, for example, has produced a testing kit, which they say costs less than $2, ago, whereas, testing kits, in the developed countries cost, probably $100 or more. So again, that's an interesting, shall we say, highlight. They had the experience of Ebola, which was a few years ago, and they had been continuing that, testing and research since then, and they seem to have developed, something that is serving them quite well. So in that regard, Africa hasn't done too badly. But in terms of the economies, we've all struggled because of the lockdown. So trade has, slowed down. But talking about trade, Nigeria is, the biggest, economy, and so a lot of the trade within the region had some connection with Nigeria, either production in Nigeria being sold to other countries or other countries trying to sell into Nigeria. But the borders of Nigeria were closed sometime last year, which had nothing to do with COVID-19. The government was trying to control imports of products which they felt were undermining the economy, cheap rice from, Asia, so that they wanted local farmers to, be encouraged to produce more. So that we can have self-sufficiency. But this has had an impact on the rest of the region. So because they used to be able to buy things which were produced in Nigeria, they've had difficulty doing that since that closure. And they also were able to sell into Nigeria whatever they produced, so that's been a problem. And again, that has nothing to do with COVID-19. So that has affected a lot of the region since then.
Thanks, Theo. I think you take me very nicely into the next question. You've already spoken about the importance of Nigeria, the largest economy in West Africa. Now let's take a deeper dive into that economy and focus on a couple of sectors and segments in that society. So how have family businesses and large corporates done during this crisis? So in Nigeria, talk us through how the year has been for them.
Well, I think I'll speak more about large corporates because family businesses are not that, preeminent or not that, many in Nigeria. It's still something that is developing. But you won't have as many, you won't find them, in the same way as you'd find them in Europe. But large corporates we can speak of. Now, different sectors have fared, differently. Because of COVID-19, the telecom sector, everybody's working at home and, remote working and using the internet. So the telecom sector has done quite well, as they have in most other countries. Fast-moving consumer goods, especially low-priced items and necessaries, have also done quite well because people stay at home, they consume more, but they consume more of the necessaries because as a result of COVID-19, job security has been an issue in many parts of the world, including Nigeria. So there have been job losses, so people are not sure of the future, so they only buy essentials. Discretionary incomes have gone down. So yes, for those producing essentials, they've done quite well. For those producing non-essentials and luxury items, they haven't fared so well. Also, the entertainment industry hasn't done so well, again, because people don't go out, because of lockdown, so they've not done so well. Hotels and restaurants have also suffered because, again, people are not allowed to go out, and even now that they are allowed to go out, people are being careful. So those industries haven't done so well. Let's see. Yeah, so if you're manufacturing essentials, you wouldn't have done too badly. But another element that's been, an issue is foreign exchange availability. Now, if you are manufacturing, you need to import, raw materials. Because of the drop in oil price, sometime last year, the availability of foreign exchange has been, less than it used to be. So manufacturers have struggled to find enough dollars to import the raw materials they need to import. and that has led to cost push inflation, because if the cost of bringing it in has gone up, then the cost at which it's sold has gone up. So you've got that tension. Costs go up, incomes go down. So that's made it difficult for a lot of people, both on the consumer side and a lot of people on the manufacturing side. So we've had those problems. We also have had challenges with the ports. That's nothing again to do with 2020 and COVID-19. Clearing goods at the ports in Nigeria has been a problem for a while, and that didn't get any better in 2020. So even when you get your goods to the port, getting it out of the ports can often be a problem. So it takes several weeks. In fact, before the border closure, it was easier for some manufacturers to import through the neighboring country, Benin Republic, and truck it by road into Nigeria. That was actually cheaper than getting it straight to a port in Lagos. So those are some of the things that we've seen in 2020.
Okay, that's fascinating and interesting to hear the challenges that corporates, like you say, have faced in Nigeria. In the context of international investment now, Theo, and specifically inward investment into Africa, what have been the trends and challenges you would say characterize 2020 for West Africa? So inward investment into West Africa, what's the trends and challenges you've seen for 2020?
Yeah, well, in terms of trends, I would say that the volumes, have gone down, and that's not surprising. I mean, the investors all over the world are themselves, facing difficult times. So the cash available for moving to other parts of the world has reduced, and now with COVID-19, the uncertainty has gone up. So how do you decide which country or which jurisdiction will provide you with the best long-term investment? That's been a challenge. How do you decide? I mean, you look at Europe, one day they say they've gotten COVID under control, and the next day they're saying, oh, it's getting bad again. So if you're an investor sitting in one of those countries, you really can't plan beyond the next 6-12 months. And if the investment requires a longer, which most often is the case, a longer term view, then you would say to yourself, okay, let me hold on and see how things pan out over the next few months, and then decide where to put the money. Now, that's one view. Of course, there are people who are saying, well, let's take advantage of the low prices, because a lot of assets have, dropped in prices because, they're not performing, and the owners are suffering cash flow, challenges, and they're happy to sell to whoever will take this problem or this headache away. So there are assets available to be acquired at, you might say distressed, prices. But of course, the buyer again has to decide, well, if I do buy it, is it really going to be possible to turn it around? If you buy a hotel today, the question is, when will you start filling it up? so yeah, you might get it at a low price, but how do you, if it's not likely to fill up soon, then you continue to burn money for a while. I mean, some of the big hotels in Nigeria have struggled. They've had to start doing takeaways just to keep things running. One big hotel in Lagos was offering a laundry service just to keep its machines running. I mean, it's that bad. So yes, investors are looking at things, but they're looking at things carefully. The oil industry is still there. Yes, prices went down, but they're not so bad now. I think there's been some pickup. So there's still some activity. I mean, if we have 1 or 2 clients right now who are looking at that particular industry, especially on the service side, because all companies will still require services. And so if you invest on the service side, it'll still be in business for a while. We also have something in the oil industry called local content requirements. In other words, the government has tried to encourage local companies to be engaged in the oil industry. And so they are given preference when it comes to award of business and award of contracts. So if you're a local company, then you might see better long-term prospects. And so you have foreign companies that are looking at, okay, if I can buy a piece of a local company, we keep it, majority controlled by locals, so it still qualifies for those advantages. Then maybe there's some return to be made there. So you've got things like that happening.
No, that's excellent. So I think that's a good roundup for 2020. Let's look forward to 2021. And where do you see the opportunities, again, from a family business or large corporate perspective, whether they have a regional presence or a pan-African presence, or have aspirations for that? So, where do you see the opportunities for those type of large corporates or family businesses?
Yeah, well, I don't think that the opportunities in 2021 will be different from the ones I've described for 2020. In 2020, we talked about telcos and consumer goods. In fact, telco stocks all over the world have reached incredible heights because of that, and it doesn't look like they'll be going down anytime soon. In Nigeria, fintech is also growing. A few fintech transactions have been done in 2020 at incredible valuations, and that's not likely to come to an end soon, because the more we work remotely, the more we need to do transactions remotely, and that's where fintech has a clear advantage. So fintech is certainly an area that will grow, and when you realize how underbanked most of Africa is, you will see that in the long run, there is an opportunity there. The more you get people into the banking system, even if it's just mobile banking, then there's business, there's opportunity, there's potential in that area. When you look at the population and the number of people who are not yet in the banking system or in the financial system, then you see a great opportunity there. Whereas in Europe and America, you've got majority of people are already in the system one way or the other. So that's an area that is certainly there for as a place of opportunity. Then we talk about consumption. People need to eat. Even when they stay at home, they have to eat. So agriculture is certainly an area that will continue to provide opportunity. The thing is, there are challenges with agriculture. Downstream processing is a challenge because you have to have infrastructure, power, roads, etc. So the farms are usually not sort of inside a big city. The farms are far away from big cities. So how do you get it from farm gate to the urban centers where most of it is consumed? That's going to be a challenge, but there's certainly a demand or a need that is to be met. And in the long run, that's another zone of opportunity. I mentioned infrastructure, and that's also tied to that. So if you are in the business of providing infrastructure, whether as a construction company or as what they call permanent capital, as opposed to a private equity, company, then there's an area that's another zone of opportunity. Of course, the challenge there is recouping your investment, pricing it right so that people pay to use the service is enough to give you a return on your investment, especially if it's being done in an area where there is not as much economic activity yet, but there might be a potential for economic activity to ramp up over the next few years. So you might need governments to step in and provide sort of the seed capital to get it going, and then once it's de-risked to some extent, then it's easier for investors to come in. But we certainly need power is something that we need badly in Nigeria. I mean, our power production is very low compared to our population. We on a good day we don't do up to 10,000 megawatts with a population of almost 200 million. compared to countries like Egypt and South Africa that do 4 or 5 times that quantity, with populations which are a third or a quarter. So that's an area where there's opportunity. The government has tried to they control the price of the tariffs. So the price that is paid by the ultimate consumer is regulated by government, and that makes it's too low to be viable when you go back upstream. And that's where the challenge has been with regard to power. But once power is provided sufficiently in Nigeria, the economy can begin to wake up. Now, a country like Ghana appears to be producing enough power, although the price is high, but you'll have enough of it. And so there are companies that are looking at Ghana as a place to invest in, because the infrastructure appears to be in place. I mean, the one challenge though is that the market, the immediate market may not be as big. The population of Ghana is about 30 million, whereas Nigeria is 6 or 7 times that. So the question is, if you produce there, can you produce there and sell elsewhere? But with Nigeria's borders being closed, then that's not yet an attractive proposition. So those are the challenges you will see, but there are also opportunities depending on how long your view is. If you're looking at 3, 4, 5 years down the road, then certainly this is not a bad time to begin to come in and get your feet wet.
No, I think Theo, I totally echo the sectors that you've highlighted where there's opportunities, but obviously there is challenges to deal with that. And technology, like you rightly pointed out, has been an eye-opener, not only from a survival perspective, but to grow, to continue to grow. Fintech you highlighted, but just generally, I think as we progress as a society, as a global community, technology is going to play an increasingly important part. So totally echo the sentiments that you've made. Let's focus on international capital. You touched on that in terms of investment opportunities, but how can international capital be encouraged and incentivized to invest in Africa? So what can the West African governments do to incentivize and encourage inward investment in international capital into that region?
Yeah, well, it's something that looks, or the answer might be easy on paper, but making it happen is where the challenge has been. Now, investors talk about, okay, is there a rule of law? Is it followed? I mean, people. Now, the interesting thing is governments think that investors would like tax incentives. That's what will make them come. But the truth is, the tax rates in places like Nigeria and other parts of Africa are not that high compared to Europe. But that has not, the investors have not come because of that. So clearly, tax rates and tax incentives are not the sweetener that investors are looking for. They're investing in places with much higher tax rates, but those are places where there's a little bit more certainty. And when we talk about certainty, we're not talking just about certainty with regard to rule of law. There's a bigger picture certainty with regard to politics. So can I trust that if the government gives me terms today, those terms will survive a change in government? You see, which is not just a matter of rule of law, it's a matter of certainty of philosophy, certainty of government thinking. So a new government might come and say, well, okay, that was an idea that the last government had. We don't think it's a good idea. We will not go ahead with it. We'll no longer support it. Meanwhile, the investor has put in half the investment and he can't take it out. So it's a sort of thing that gives investors the jitters. Now you might say, okay, when you look at what has happened in America, just to diverge over the last 4 years, there's been a bit of that, it's the sort of thing that happens more often in Africa. So Trump came in and pulled out of certain treaties and changed his mind about what the government should do in certain areas. And that meant that if you had proceeded on the basis of previous, previous picture, you had to make adjustments. Now that's a place where there is rule of law, but you can also have, as part of rule of law, a change in government philosophy. And that's something that is prevalent in Africa. And people struggle to do business if they have to also watch the political temperature and the political climate. And I think that is probably one of the biggest problems that we have in this part of the world. Ghana just went through an election, a couple of weeks ago, and the government in power, the president, got a second term, which for investors would be a good thing. They know that, okay, so if we had any discussions prior to that, we could continue and we have another 4 years to now get the project vetted. Whereas if there had been a change, then you start worrying, okay, the last government said this is what they would do. The new government would spend some time reviewing it, even if they don't change their minds ultimately, but they spend a few months reviewing it, during which everything comes to a halt. That's another problem. So in that sort of vacuum, investors worry. Okay, I've gotten money that is costing me, because quite often governments don't realize that investors are investing capital, but that capital is coming at a cost. It's not like I've got cash in a drawer. I have to raise it from somewhere, and I'm paying for the money that I've raised. Even if it's my own money, there's an opportunity cost. So governments think that, well, we can delay it for while we're thinking about it. It doesn't matter, but it does matter for the investor. He's losing time, and time, is money. So those are the things that create the challenges. Now, if that certainty can be brought about, I think investors would come in, because the opportunities are there. They're clearly there. So that's what brings investors in. Not so much the tax incentives. And if we can give them the certainty they seek, then I think that would be probably the biggest incentive, so to speak, if you want to call it that.
Yeah, no, I think that's a very useful and important factor and point. In addition to all the other financial incentives, this global certainty that you talk about, jurisdictional, political, the operating environment, all those certainties put together is equally, if not more important, like you say, than the financial side of it. So I agree with you. So let's, coming on to our final question, and your thoughts on how you think West Africa will do in 2021.
Well, let me put it this way: if the current lockdowns, which still exist, and restrictions on movements continue, I'm not sure that things will be that much better, because there's nothing to suggest that there will be improvement. But if we are able to begin to operate a little bit more closer to what we had before COVID-19, then we can talk about improvements. I mean, right now, if I wanted to travel to Ghana, the flight from Lagos to Accra is a 50-minute flight. But I have to do a COVID test before I leave Nigeria. I do a COVID test when I land in Accra. Then on my way back, I have to do a COVID test, before I leave. And then I land here and I do isolate for a week and then do another test. So that's like 3 or 4 tests, just to go. It's like traveling from London to Paris. If you have to do 3 tests just to go back and forth, it's not very, you put off the trip. And so those are sort of challenges I'm talking about. Now, if you don't remove those challenges, then it's going to be difficult for people, to do, a business as before. So that's why I say if things stay as they are, it's going to be difficult to see much improvement. But I'm hoping, that this second wave that appears to be hitting Europe doesn't hit West Africa or Africa in the same way, and that we will eventually come out of it much earlier. I mean, we have proceeded probably inadvertently with a philosophy of achieving herd immunity, which is one of the ideas that some European countries had talked about. But that's what we seem to have been doing, because we're not testing as much, but we're not dying as much, which means that people are getting it, they're not dying. So eventually we'll all have some sort of immunity, and that's, at that point, it would be easier to open the borders and have people going and coming.
Excellent. Thank you so much for your sharing your insights, Theo.
You're welcome.
It's been a pleasure speaking with you. Thank you to our viewers for watching. Until next time, stay safe.